Begin then. Hello, everybody, and welcome to this live trading session here on FX Street. My name is Pedro Mejias, and I'm with Tradewithufos Nailing FX. And as you may know or not, I work with the order flow system. Before we begin, please let's read the disclaimer. You can see on the screen. The following video clips demonstration are for educational and instructional purpose only. Tradewitz provide these videos purely for the purpose of demonstrating the method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained to the demonstration do not indicate in any way the result you may receive on using our products. All right. With this out of the way, let's begin. As said before, my name is Pedro Mejias. You have my email right on the screen. It's pedro@predictive.com. If you have any question during the presentation or after, if you are looking at the recording, you can always send me an email. If you are here live, welcome. And please use the chat if you have any question or comment. I will be checking the chat often. All right. Okay, as you can see, order flow, it might sound, I don't know, something new, something different, but order flow is very simple. It's just the way the market works. It's how the orders are implemented in the market, buying and selling. It's very simple. It's market mechanics, basically market mechanics. That's what order flow is. And it's something that many retail traders just don't even think about, okay? Because most of the retail traders are used to technical analysis and many other techniques, but they don't pay attention to the order flow. And because one of the reasons I believe is because, I don't know, it's not so attractive, like painting, I don't know, a Fibonacci retracement or making some, I don't know, butterfly on the chart or whatever. There are many reasons why maybe nobody look at the order flow system. But let me tell you, it's market mechanics been there all the time. It will be there forever because it's what actually moved the market. Orders, buying and selling, pending orders, market orders, other stuff. That's order flow, right? It's how the market works. So why don't you take a deep look at how the market actually works and put that into advantage on your can be your edge, because you'll be looking to something different that all the retail traders are looking at. Before we get into the market order and order flow, let me show you a chart. This is a trading view, and here we are looking at the euro. This is current session, and we can see here have an indicator. It's called Trade with UFOs. You can see these red areas and these red circles. Maybe many of you already know it. If you know it, please type it on the chat, and let me know. And what I want to show you here is that this indicator is showing us what it believes it is the pending orders that are left on the market. When we see this down movement, it surely left some traders behind, right? So orders behind here. And we can expect the market to come back to these areas and then continue the down movement, or just go on the upside. We don't know that, but this indicator actually helps a lot to find those areas. If you are not into more detailed thing, I mean, this can really help you. And we have here on the bottom another indicator which show us what is believed to be the tendency of the current market. It's pretty simple. I mean, you see the red lines. It means that it's like a downside market, and we see the big circles here. It means that it's confirmed. So it's a downtrend confirmed. Okay, when it's blue, you can see it's a uptrend, and when these dots are bigger than you can see these smaller ones, it means that it's confirmed. So it's helped you to determine the direction you may want to trade. As you can see in this chart, I have a 5-minute chart. I like to trade very short term because think about it. At least for me, it's pretty hard to predict what's going to happen in the next, I don't know, 30 minutes or next hour, even a day. I mean, for me, it would be something really impossible to predict what's going to happen in a day or a two, in a week, in a month. I mean, it's something I cannot even think about it. All right, so that's why I focus on what it is a very short term, minutes, maybe an hour, but I will never look beyond that because of that reason. Because if you start looking at things in very long term, you will be talking maybe about an investment. There's a say that an investment is a trade that went wrong. And yeah, that's pretty much it. I mean, if you don't know how to trade, you should invest. If you want to trade, you should focus on very short term because it's what you might be able to handle, not long-term trades. I mean, not for me at least. Okay. You have any thought about it, just put it on the chat and I will be reading your comments. Okay. Okay. So as you know, the market move up and down, and what actually makes it move up and down, what it is, I mean, it's buyers and selling, is pending orders, is liquidity, or is a mix of all that, right? Just let me give you a very short explanation on how the markets actually move. Okay, this is the depth of market. I don't have a connection now. Let me just log in my account so we can see the market order flow. Just give me a second. Reconnecting the account now, and this will light up. Now it is. You can see. Well, and now you can see here. There's the price. There is the not only the price, but you can see here the pending orders. You can see the market orders. And let me just give you a quick explanation on how, on why the price move up and down. If you have, these guys are waiting for their order to be filled. Okay, these are pending orders that if necessary, you want to enter the market. If there is no pending order, you won't be able to enter the market anyway, because you need to buy or sell, right? If you want to enter, you need to, if you are selling, you need to buy that position to someone. You are buying, you need to sell your position to somebody else. And that's why these guys are needed. These are the liquidity providers, which are the market makers. Okay, this is what actually is called the market makers, because they're giving liquidity to any market. In this case, we are looking at the euro. And we can see you can become actually a market maker just by putting a pending order. Once you put a pending order, you become a market maker. When you buy or sell at market price as an instant order, let's call it that way if you want, you become a market taker. And what it means that you will take, let's say you want to buy one contract at X price, right? At this price or whatever the price it is. Once you buy that contract, you will buy it to someone that is selling that contract. And at that moment, you become a market taker. All right. And if many of market takers put market orders and take all the liquidity available in the X side, which is this one, the red one, what will happen? Well, the price will move up because you are buying to these guys that are selling. Okay. So that's how the price move up and down. The same way on the blue bar, which is the bid price. These are pending orders, and these guys are just market takers. They take whatever it is at whatever price is available, right? And once they take all the availability here, what will happen is they will move the price down. Okay, these guys are selling, and these guys are buying. So you are selling, you are a market taker here on the bid side, you will be selling to these guys who are buying, and that will move the price down. So that's basic market mechanics. That's something you should know if you want to start trading or you're already trading. Okay, that's nothing else move the market, just this. That's it. The action of the traders are what move the market. And now let me show you how we can use this information. But of course, if you look at the chart, this is basically, let's say you don't have this indicator, you only have bars. This is mostly what people have when they're trading. Only bars, right? Time-based bars, whatever it is, 1 minute, 5 minutes, 1 hour, a day. They just look at bars. But what actually means? I mean, you know that it's red. The price was closed lower than it opens, and it's green. The price closed higher than it opened. That's all you know. And you know which price it closed or which price it opened. That's it. But you don't know how many trades took to make this candle a red candle, or how many trades this green candle made this candle a green candle, and where are the support and resistance? I mean, some people believe that the support and resistance is just a line that is on the top and on the bottom. That's support and resistance, something like that. But it's not. What actually makes supports and resistance, real support and resistance, is volume. Okay, volume is what makes supports and resistance. Let me show you a chart now where we'll be looking at actual order flow. We can see here. This is the same chart. We're looking at the trading view, the same chart. Let me just switch it to candles so you can see it's the same, pretty much the same thing. I mean, the same price action. Okay, you can see how the arrow is going down. It's great. But here we have an advantage that we can actually see the order flow that is making this going down and what is keeping it to going up. Okay, what is avoiding this market to go any higher. We can see that by looking at the order flow. Just open this a little bit. Okay, and we can see exactly what is happening in each candle and how many orders they are, how big they are. You can see everything. And we can find where are the true supports and true resistance here, because we can see where the volume is and where the losers are, where the winners are. We can see everything. Let me just put you an example right here. You can see at the top here, we have pretty big, let me just highlight this better because let's put this in orange. Okay, you can see now this area right here that I pointed at you, and you see these green numbers. For me, for my settings, these green numbers are called imbalances. And market imbalance are huge difference between one side and the other. I mean, different between buyers and sellers. In this case, we see the difference here at this top is for the buyers. So what happened here is that these guys thought that the market were continuing to go on up, all right, or there was a change of direction, but they were wrong. So they are now trapped in here. Okay, they are trapped. There are very big orders in here that are buying a market that is going actually down. And when traders are trapped, they only have one way to get out, and it's closing their orders, right? Either in profit, break even, or at a loss. And sometimes stop loss will be hit. So if you're buying, you need to get out by selling. If you are selling, you need to get out by buying, right? That's how market works. And right now we see these big buyers here trap, right? Because the market were actually down. This is not the best example, but it's for you to understand how the market works. And what happened when you guys are trapped into a position like this? You thought that the market was still coming up, but then you realize that it's keep going down, right? So you have only one chance, is to get out of there. And to get out of this position, you will need to sell your position. And what's the best opportunity is to either have a break even or a small profit, right? So when these guys, you identify that these guys are trapped in a trade, they will take the opportunity to get out by selling their buying position as soon as they get a break even, all right? But it's exactly what happened here. You can see how the price went up into their area, and now you can see this green spot here is a big buying, which means that another guys were either trapped here again. They made a mistake. They thought, oh, this is going up. This is going up again. Or this is the one. This is the one that is going up. And if these people bought again right here. We can see on the inside the candles once again. See? Let's see where they are. You can see here, big green numbers here. Actually, other way. Okay, they thought, oh, this is going up. This is going up. This is the one here. This is the one. It's going up very strong, and they keep buying, but they keep getting trapped again. And once again, the market went down. All right, the stop loss were hit. You can see here these red numbers that are big stop losses being hit. And when this happened, the market would go sideways a little bit, then goes again up. All right, and now we have an opportunity here. If this is a break-even area for these guys, we may have a chance here to sell at this range and get a small profit. Okay, that's how one way that you can use the order flow. Okay, the order flow information that you see here. Okay, there are many tools. Well, you can see the chart is actually pretty much loaded with other stuff that I'm not talking about. But let me just talk about it really quick. You can see here on the right side, these numbers, 127, 45, 80. These are the pending orders that we just saw before in the depth of market. Here, the same. These are those pending orders. Okay, that we see here are the same here, but are laid down on the chart, which is very, I don't know, more useful to see, very easy to understand. And I can see where all the traders are all the way up. I can see all the pending order. I can see all you guys euro orders in the market. Okay, I know where everybody is pending either for an entry or an exit. All right, I can see everything. And this is something that retail traders don't pay attention to it. If you have any system that is working, that's great. Keep doing it. If you want to confirm or know that your Fibonacci retracement is actually value for someone, you will find pending orders of a high number in that area. That's a way to confirm that your idea is something that might mean for somebody else. Okay, that is not just your idea. And the only way to know that is by um, knowing which are the pending orders. If I'm looking at this price, for example, this range right here that I pointed out, and I don't see any interesting big pending orders either above, below, or within, I will ignore that because I will be the only one is looking at this price. That liquidity is available is very important because it's what will allow you to get into the market quickly and get out of the market quickly. If there is no liquidity, like let's say here on the top, for example, here there's empty spaces, right? And when market moves pretty fast, for example, during a news event, what happens is that everybody take their pending orders away from the market, leaving all these empty spaces. Okay, leaving all these empty spaces, and price will just go through it very easily because it will have to go to the next price, and so on until it gets liquidity to I don't know, if you have a stop loss, for example, and you are losing money and your stop loss keeps sliding, it's because there's emptiness in there. There's not enough liquidity to fill up your stop loss, and we keep moving up and up and up until it finds some liquidity where it can put your order. And depending also on your order position. If you put an order, let's say at this price right now, you will be on position 53. And if the market is moving pretty fast and you are on the position 53, you will be the last one to get filled in here, okay? And that is actually another factor you have to take in consideration. You can actually, using the order flow system, you can see in which position you are on the market, so you know if you will be filled or not if something happened. Okay, we just saw here a big trade going in right now. It's making big movement right here right now. So I don't know if you have any question, guys. Use the chat, please. Remember, if you have any, if you're looking at the recording, you can always send me an email, pedro@predicted.com, and we're very happy to answer you guys. If you want access to the Trade with UFO software, you can always use my link. Is tradewithufo.com/Pedro. The software I showed you earlier before with the this one. Okay, where you can find these areas of interest where a lot of pending orders might be, right? One thing you have to take into consideration about pending orders is that pending orders can be removed out of the market. Okay, they always can be removed. They are not glued there. They can be taken away. We can see that in the depth of the market all the time. When we see a lot of orders here, let's say 103, we can see how they are removed from the market when the market is approaching that area. You can see now it's 82 instead of 103 because somebody just took away like 20 contracts. Okay, and that's happened all the time. It's one of the traps on the market is to make you believe that there is an interesting area right there, and they were just, it's called spoofing. They would just remove the pending order. There are a lot of traps in the market, and the best way to spot those traps is knowing how order flows work, how the markets work, and to see the data in real time what's going on and where those orders are flowing, because that's what's order flow. And we can see, for example, just to give you an idea, we can see here how many contracts in total on the whole euro market, in the futures market, how many contracts are pending here. Okay, we see 6,200 contracts in the ask side and 6,000, yeah, close to 6,000 on the bid side. Okay, so we know exactly how many lots are there in the market. So that can be actually helpful if you are looking, if your strategy requires to know that in order to know where are you going to. I mean, if you are selling or buying, that's the first thing you should know when you see the market. You should know where you want to go. In this market, I will definitely be selling. Okay, maybe not this price here, but it's interesting anyway because we can see a lot of selling going on at this area. We can see how the price just is almost there at this area we selected because of the volume it has. It almost reaches there, but it went back down again. Okay, one of the areas I will be actually looking at to get in will be if I'm seeing these areas as actually my entry point. I will be looking at liquidity. Okay, where the big liquidity is. Let's say this line right here. Let me just highlight it. Oh, it's very thin line. Let me just change it a little bit. It's up. Let's put it more width. Okay. Change the color. Also seeing different like this blue. Okay, so here it was a lot of liquidity. Now it's a little bit lower because price is moving down. So they move the liquidity down, but they might get back here again. Okay, the liquidity. So I will be putting my order below this price. Okay. You see again, it's 107 in the line. So I will put in my order below this line because it will act as a kind of a support level here or resistance because it's going to get 108 lots to go through here. Okay. And that will put some resistance actually in the price. If there's somebody interested to go through that price area, it will go. Okay, that's nothing will stop it. But right now it's an interesting price area. Okay, and I will be looking at this. You can see how the liquidity is still there. It's not being removed despite the price is getting closer. Okay, remember that we saw these areas here where a lot of sellers, buyers enter in this area, and they are now trapped, and they might be desperately looking for an exit, and the exit is getting closer to them as we speak. And once the price gets close to their entry, they might be interested in getting out of the market, right? Let's see what's going on the here is you can see less action in the bars. You see the price. That's pretty much it. On the bars, you don't see actually what is happening in terms of the order flow. And that's why I will use the order flow because it tells me exactly what's going on. Okay, in the bars you don't see anything. You just see that bar, just bars. Where is it? Here it is. Okay. And look here, we have the UFO right on the very close to the area we believe there is interest in the market. You can see here. Okay, you can see the price is 121, 145, and we have the UFO 121, 175. So our area will begin very close to this one. Okay, and it will end at 21,180. This is more wider, but it's good because where are we going to put our stop loss, right? It's going to be behind these areas of interest because it will act as a resistance once again. Look now at the liquidity here, 154, how it's been growing as the price is getting closer. Okay, it's putting like a small wall here. Okay, that we don't see here. We don't see it, and when we're using only bars, we don't see that information. But we see that if we're using a market feed with order flow. Okay, see the difference just by looking at candles and looking at actually what's being traded. You can see how many orders are being bought and sold here in these candles. But here on the candlesticks alone, you can see nothing, just bars and a price. And that is not enough because somebody else is looking at the whole information that will put you into a disadvantage. Okay, let me go back to the charts, the wrong one. Okay, we are now in the area. You can see how the price, let me just stretch this up, how the price is getting into our zone here. Look at the liquidity now, it's being switched about a little bit higher. Okay, but it's still there. But this is our mark right here, this blue line. Let's see if price can actually get there. If I were looking for an entry, let's see how the volume was in this particular candle. Let's see this one. We'll look for small volume on this down movement here to spot a good entry. Let's say I like this one. You can see how it goes through. You can see the liquidity is a little bit about it. So I will put my sell limit right there. Okay, I'll put one order just for example. And I will wait for the price to get there to reach my pending order. If I wasn't on a demo account, I will be looking at my order here. You can see here how it shows me my position. I'm at 48, virtually at 48, 47, because the orders are being filled or removed at that price, okay? And my position is moving down as the price is getting closer. Okay, so I know which is my position in the market. Now I'm at 40 in the list, on the list for my order to get filled. I'm 21 right now because people are removing. Now I'm in, okay, now I'm in the market, as you can see, with one lot. And I have to now watch at my entry and determine when am I gonna get out, right? And look at this one. I have 106.36 pending orders here that will act as a support level. So I might be looking at this area to get out. Let's just put a stop loss and an exit. Let's put this whatever at first. Execute it. Okay, so look at here. I will be getting out before the price reach this level here because there will be a resistance for the price to get out below this area, okay? And the same way on the top, I will be looking for protection behind orders, okay? That's basically how you can use the order flow system to make precision entries, exits, and stop losses as well, okay? And what we can see now, their orders are being filled here. You can see buyers, sellers getting into the market. okay, because this is an area which is very interesting. You can see now the price is moving a little bit the low side. We have only 5 minutes left, so let's see what happened in the rest of the time we have. Okay, we can see how. Let's bring up the depth of market. Okay, we can see now how our position is gaining profit. We are just with one contract. We can enter with as many contracts as you are comfortable with your money management. You can see this number here in between the red underprice and the blue underprice is market orders. If we want, if the price is going to move down, we will see market orders in this column. Okay, if the market's moving up, we will see market orders in this column, and we are looking at right now. Okay, and we can see the liquidity all the way up and all the way down. All right, we want the price to go down in this case and reach or exit right here before it gets into this liquidity here, which will act, as I said before, as a resistance. Okay, the same way here our stop loss is behind a 121 lot side pending orders. Okay, that will give us some kind of protection. Okay, and all this has to be based on the market's orders that were taken before. Okay, we entered the market. We spot an interesting area, right, where we found some trap traders that were now probably are closing their entries. If we were right, okay, they will be closing their entry, allowing the price to move a little bit higher, because when they're close, the price will actually move a little bit higher, and then it will move, will continue to go in the direction that is was going in the first place. Okay, markets tend to always get in sync and synchronize things, synchronize buyers and sellers, synchronize orders, filling gaps. Okay, all these things happens in the market because traders make it happen. Right? It's not just magic or something that just happened. No, it's traders actually make things happen. When a strategy works, if you are working with I don't know market technical analysis strategy, when it works, it's because somebody allowed it to work. Somebody make it work. I mean, we're talking about market makers or market takers. I can see you have some questions. Let me see. Give me a second to bring the questions and answers. Okay, if you want to use the software, you can send me an email. You are here. Here's my email. I'll show it to you. It's pedro@predictive.com. Just send me an email there. I will send you the link so you can download the platform and use the data feed for the futures market. If you are trading Forex, you can use it anyway, because you can always, let's say, analyze the market here and then place the order in whatever you're trading. Okay, that's one way you can use this, because it's the same price action. If you're looking at futures or Forex, it will be the same price action. And see how in the where we put our entries around here, right? This line. You can see we're still in the safe zone, and we have all this red area here to protect our entry. All right. And let's go back to the chart. It's moving a little bit higher now. hope that once these guys already closed all their entries, okay, in this top here, price will continue to move on the downside direction. Okay. Well, I think we are at the top of the hour. I hope you guys enjoy the session. I will be next Tuesday on YouTube, and the next one here again on FX3. So keep an eye on my sessions. You can look at the recordings, and thank everyone for being here. All right, thank you guys. Bye bye.